Hello everyone. It's Khaled. Welcome to today's daily pitch, 30th of April 2026. Let's dive into the latest economic events, technicals, and see what's moving the markets. Well, a lot is going on in the markets. We will start with our economic calendar. What do we have? What to expect? What happened yesterday with the Feds? We will be analyzing oil, equities, and gold. And also I will be sharing with you my entries on gold and what was the result. So let's start with our economic calendar and see what do we have. Okay guys, so as we all know that during this week we still have a lot of central bank decisions. All of them are expected to keep interest rate the same, just the wait and see approach, especially regarding the geopolitical tensions. During the day, we had the manufacturing PMI for China, which was better than expected, while the non-manufacturing was worse than expected and lower than the 50 grade point. And moving on, during the day, we had some GDP and CPI for Europe zone. For France, the CPI, to be honest, what is more important, I look at the German economy because it is the biggest economy in Europe. We can see that the unemployment rate has jumped up to 6.4% and the previous was revised higher. So not very good. The CPI in the Eurozone as well at 3%. Previously it was at 2.6%. Hello everyone. And as well the unemployment rate at 6.2%. Of course, it is expected for the CPI to be the inflation to be moving higher due to the higher cost of energy that we had during the war. Moving on, after 1 hour, we have the interest rates for the UK. The interest rate is expected to be the same at 3.75%. What is the expectation? The expectations is that out of 9 members, we are expecting to see 8 members to vote for a no change and 1 member to vote for a hike. So here, what we should be looking for, even if we had 3.75%, we will be looking at these numbers. In case we see that more members are voting for a rate hike, this could be indicating that the Bank of England is looking to be more hawkish in the future. As for the ECB as well, they are expected to keep interest rate the same. The ECB expectations is to start hiking from the next meeting, but of course, from now till the next meeting, a lot could happen and this could be changing. For the NYSE session, we have the GDP for the US, which is expected to move up to 2.2%. We have the PCE, which is the inflation or the most favorable inflation measure for the US is expected to tick higher as well. The goal, the aim for the Feds for the PCE is at 2%. Currently, we are at 3.2%, so it's higher. Regarding yesterday, we had the interest rate decision for the US. It was the last meeting for Jerome Powell. A couple of interesting things took place, of course, looking at the FOMC minutes. Well, to be honest, couple of things that was interesting to me. It is here. They are making sure to mention that the Middle East tensions are contributing a high level of uncertainty and risk of both sides if it's dual mandate. The dual mandate is the Feds keeping interest rates, keeping inflation under control and at the same time monitoring the unemployment rate. That's the dual mandate, keeping maximum employment and taking care of the inflation. And what is more important is here, the voting. During the voting, all of them, almost except one member, which is Stephen Miran, he's related to the US president, he voted that he wants a 25 basis point rate cut. But 3 members voted for rate to be not changed, but they are, as you can see, did not support inclusion of an easing bias. Analyzing this sentence, it means that the Feds is being more hawkish. How was this reflected? If we look at the charts, we can see that the dollar index started to move up. The yields as well started to move up. The VIX is relatively stable, especially because there is no major fear in the markets, which is related to the geopolitical tensions. Moving on, Let's have a look at the US equities. This was our last analysis on the US equities. We were here, we said that if the US 30 will be rejecting the 50,000 or the 49,900, we could be moving lower. It moved lower to our first area of interest, the 49. It also started to break below this level and currently it's retesting. So speaking regarding the trade IDs, I will be having the same zone, same trade IDs and the fundamental bias, keeping in mind that, as I mentioned, we had a lot of economic data. In addition to that, we had yesterday the earnings of several tech companies. We will be discussing this later because several tech companies, the earnings were better than expected, the revenue was better than expected, but they saw a down drop due to the markets estimating, or the numbers, that in the next quarters the numbers will not be better. This will need additional explanation. We will do it later. And what was more important today is that we had some verbal intervention regarding the yen. What does verbal intervention mean? Regarding the USD JPY, whenever it starts to reach the 160 level, here we should be on alert that the Ministry of Finance could do an intervention. But several times they don't do an actual intervention, they make a verbal intervention. They start to say that we are keeping a close eye on the rate, we could be intervening soon, we are looking at the FX. And if we move on to the lower time frame, watch out, I'm going to move to the 1 minute time frame. You can see that these strong candles, like from the 160.5 down to the 159, that's like 70 pips in 1 or 2 candles. So here we had an intervention which also had some impact on the market and had some impact on one of my positions on gold. I will show you later. So to summarize things, I mentioned it's critical. We had yesterday the meeting for the Feds. We have today the ECB and the Bank of England. We have a lot of economic data. We have earnings for the companies, and as well the current verbal intervention taking place from the Japanese yen. So I'm expecting to see some volatility today and expecting to see, to be honest, hard trading conditions. That's why anyone is looking to trade today should be very careful. Adjust your stop loss, take profit, adjust your lot size based on the volatility we are seeing. Back to the charts and to our trade ideas. Looking at the US 30, I will be looking for the following. In case I see price retesting the 49,100 to 150 again, rejecting at this level, failing to break higher, I will be looking for the following price action, and it's important for me to see candles breaking below this level. With the hawkish tone we had yesterday from the Feds, we are seeing dollar strength and possibly we will see some weakness on the US equities. Let's have a look on Nasdaq and see what is going on. Sorry, I'm a little bit sick. Nasdaq is still respecting our analysis. This was our previous analysis, still respecting almost this area, not breaking higher than 27,500. So same trade ideas for me. In case I see price rejecting here once again, I will be looking for a retest of the 26,500 and of course a rejection of this level. We could be moving higher. This is my trade ideas on Nasdaq. Let's keep an eye on this range. And one more thing to keep in mind, that we are at the end of the month. So a lot more times than not, you will see what we call a rebalance of flows, some profit taking, some price adjustments. So we could be expecting some volume and volatility. Looking at S&P 500. Similar to Nasdaq, S&P 500 has been respecting this level, the 7,200 approximately, and currently rejecting with no clear movement. So in case I see price again even digging a little bit higher to the 250, maybe 230, sorry, I could expect to see something like this. My next target will be here, these candle lows at the 7,150. In case we broke lower, we could be retesting again the 7,100. That's it regarding the US equities. Moving on to Brent, let's have a look. Well, during our last analysis on Brent, we were here. Well, I wanted to see a retest of the 98.5. Unfortunately, this did not happen. Price just kept moving higher. It broke above this level that we were marking at the 107. 107.3, 107.5, and retested our next zone here at the 115. The price is currently rejecting the 115. What is the next scenario I will be looking for? I am more bullish than bearish on oil, even with all the headlines we are listening that the war would be over, we could have some deal, but fundamentally speaking and logistically speaking, it will be very hard for oil prices to be dropping back to the 70, 75 that we used to see before the war. Although in case we had any headline saying that there is a deal between the US and Iran, we could see an initial reaction, price dropping, but in general, oil prices, I believe, that's my personal opinion, could stay higher. So here, technically, in case I see a retest to the 1.7.3 and price rejecting once again, I will be looking for the following price action, at least candles retesting the 114 again. With additional momentum or additional fear in the market, if I see candles breaking higher, I will be targeting once again the 119 like this. And finally, the final scenario, which I hope or I would not prefer to see in case we start to break below these levels. Well, breaking below this level should be supported with a fundamental catalyst, giving some optimism in the markets, intraday candle closing lower, the next candle just making a slight upper wick retesting like this. I will be looking for a retest for the 98.5 to the 99 once again. But the more favorable scenario for me is this one. Retest, then move higher, first target, and then the next target. Finally, let's move on to gold and see what is going on. Before that, if you like our content, don't forget to leave us a like, follow, and subscribe. If you want us to analyze any currency pair, you can type for us and we can do the analysis together. The price action on gold is a little bit messy. I had two entries, one yesterday in the morning, approximately during London, and one today, like around 2 hours ago. My first entry yesterday was here. First, that was our analysis. We said that we were here. If price retest the 4,770, we could be moving lower, or we could start breaking below these candles and test. We broke below these candles, we even broke lower, we formed a resistance, and then we moved down. Let's clean a little bit the price action on gold, and then we will show you what happened. So the 4,600 is an important level. Here we have an important level, and at the, let me delete this one. Okay, the first entry that I took yesterday was here. As I said, it was pre-London. I saw that whenever price broke below the 4,600, it started to consolidate here and form like a resistance. So my entry was at 4,600 flat. I had a 50 pip stop loss, and my take profit was at these candle lows. The price action was clean, it was very nice, so I got around 1 to approximately 2.6, 2.5 risk to reward ratio. Then after the FOMC and this messy price action which is expected during FOMC, I set a limit, a sell limit at the 4,610. I said, you know what, the price action could be retesting not only the entry I had yesterday, but a little bit higher. So I set a limit at 4,610 with a stop loss at 4,625. What was very interesting and annoying, of course, is this candle. I got an alert at 4,610 that my entry was activated, and I think a couple of seconds later I got another alert at 4,625 that my stop loss was activated. So I took a loss here, and I took a win yesterday. Here a loss of -1%, for example, and here a win of 2.5%. But what was annoying here is that the price action was really fast. This price movement that we are seeing on gold is mainly related to the verbal intervention that took place from Japan. It makes this spike up. The Japanese yen spiked up, the dollar spiked down, and gold spiked up. So I have this entry. These are my two entries. Now what I will be looking for is the following. Keeping in mind, as I mentioned, all the economic data we have, you should be very careful. You should be marking several areas of interest. before taking any entry. My next area of interest, which I would like to see right now, price retesting, is here, is the 4,690. We are having some good volume and volatility. So scenario number one, I will be marking this level as well. Couple of scenarios I have in mind. Scenario number one, in case I see that the price action is reacting at these candles and rejecting, I will be looking for the following. Otherwise, if I see bullish price action similar to what we had here, I will be looking for price to retest once again these candle highs at the 4,690, even 4,700, and from here I will start to look for rejection for such price movement. And the final scenario for me on gold, let's zoom in a little bit to the lower time frame. In case I see that the price action starts to break below the 4,615, and for additional confirmation for me, keep this, please note this, for additional confirmation, in case we broke below the 4,615 and the additional confirmation is breaking below the 4,600, I will be looking for the following price action. But preferably, I would like to see price retesting this area, 4,630.40, and additional a better risk to reward ratio will be the 4,690. So guys, that's it for me. As I said, watch out for today's volume and volatility, plus a lot of economic data and headlines taking place. Mark a couple of zones, set alerts. Other than that, don't keep staring at the chart, especially whenever you are in the middle of the range. So that's it for today. Hopefully you enjoyed our session. Hopefully I was able to make some explanation regarding all what's going on in the markets. Of course, if we want to enter into more details, it will take us a lot of time and it will complicate things, but that's a general idea of what is happening in the markets. These are the trade ideas I will be looking for. Thank you so much for joining, and we will see you soon. Take care.